great. So hope you can be able to hear us. We are just still testing the internet setting and also the our TV session. We're going to cover a bit of advanced financial management to see some of the questions, 3 or 2 questions which will come in exam. And it's very important, as we all know, that from next week Tuesday, that is the when you will start doing your exam, and you might have, maybe you have not had enough time to revise this, and unfortunately it will come in exam. So what we only need to do is okay, good. I can see the audio is okay. So this is enough good time for you to know this advanced financial management, and also specifically the approach of a CASNET exam. Like on Tuesday, the 20, when will it be on Tuesday? That is, I think that is the first paper you're going to do for the CPA exam. So if you are doing any questions, or if you are doing any so if you are doing exam on Tuesday, let's gather here. We ask ourselves any questions that you feel like is not specifically for AFM, but general, it is for the CPA in general. Any question that you feel like it will come in exam and you don't know how to approach it, and you don't know how to approach that question. So exam is very easy when you get prepared. Like, just wait for that day. Wake up early in the morning. Don't do anything that will distract your mind. You just need to take your breakfast, relax, because the exam is starting from 9 p.m. Go there early so that also you avoid the inconvenience of maybe the road issues and the transport issues. So make sure that by 8 you are in your exam center, so that you put your mind in the exam environment, and also you will settle. If there's something, so I don't recommend you start reading on that day. No, don't read on that day. Don't read on that day. What you only need to do is just peruse. You open your notes as you go. Don't take time. I want to read this topic in the morning. No. You are confusing yourself. You are mixing yourself. You end up seeing a concept, and then you say, this concept, oh, I didn't read this concept all along. You start now developing a negative attitude. We need to avoid this negative attitude. We need to avoid this negative attitude on Tuesday. And one way of avoiding this negative attitude is get prepared early. Get prepared early. So exam start on 9 p.m. No, 9 a.m. sorry. I hope the time has not changed. When you were doing exam, it was starting on 9 a.m. I think that's still the same time you are doing this exam. So, which means if the exam is starting from 9 a.m., you need to get to the sitting center or exam center by around 8 a.m. by around 8 a.m. So this 1 hour is the one to which you are going to start looking for your seat. So once you find that your seat is in a specific corner and with your registration number, you start now settle down and relax. As you relax, make sure that you have your book. When I say your book, is just the books of notes, not the entire. You have the revision book, you have the past paper. No, you just need to have your book. This book is the one which you just need to open it. You peruse your notes. Don't take too much time to read. Don't take a topic and say, I want to start read this topic. If you read that topic within this 1 hour, guess what will happen? Your energy you start a drain or just drain your energy. So this energy, you start using it, reading it. Instead, you could have reserved this energy so that you can use it to think in that exam room. And the reason why I also am encouraging you to avoid reading in that period is that you might So you might get a concept that you have never seen it before, or you didn't have time to read that. So you start now developing the negative attitude, which I was saying you need to avoid this attitude so that you develop a positive attitude toward that exam. So that is the general knowledge that you need to have before you go to that exam room. We have so many areas to cover. Like if you are doing a theory paper, this theory paper also it's come with the selections of questions. Remember, if for example, if we give an example of business law. Take for example a business law. Not business, business law is the same. So take for example even the company law. So how do you need to prepare yourself very well when it comes to the theory paper. Examiner will give you 5 questions. 5 questions. I think there are selections or 7 questions. 5 questions is the compulsory questions. And then you have to do your selection. So these questions will be given question 1. Question 1 asks Roman 1, Roman 2, Roman 3. So maybe this one is 10 marks, this one is 4 marks, and this one is even 2 marks. So you need to be good when it comes to the selections of questions. You need to be good when it comes to the selections of questions. If maybe in this question 1 you realize that Roman 3, you know you have the 2 point, you know the correct 2 point of this Roman 3. But and this one you know maybe 2 point, so 2 point here and also 2 point here. So that makes 10. So it makes 4 out of 10 plus 4 plus 2, that is 4 out of 16. 4 out of 16. So 4 out of 16, who is winning? Are you winning or the examiner who is winning? In this case, it is the examiner who is winning. How? Look at the marks distribution. You got 4 out of 16 because of what? The round selections. So don't rush to a question where there is a question which you know, but they have the least distribution of marks. So if this question was an opposite scenario, that you know the entire Roman A, which it has 10 mark, and maybe you know one of these, you don't know even anything with Roman 3. So you will end up getting 11 out of 16. So this is automatically, this is a pass. This is a pass. So you also need to be keen on the questions you are selecting, so that you don't end up selecting 5 questions but with the least marks. So you need to check the distribution of the questions. You need to check the distribution, not the distribution of the marks. So it is even better, you get 4 marks here, you get 3 marks here, you get 1 marks here. So you will end up scoring good marks. So that is when it comes to the theory paper. That is when it comes to the theory paper. That's when it comes to the theory paper. So let's get to the questions of November 2017. Let's have a question of November 2017. So November 2017, date for November 2017. So for November 2017, questions. So the question for Viwanda Limited. So we have been told that Viwanta Limited is considering purchasing a machine at a cost of 40 million. So this is advanced financial management. So this is advanced financial management. Advanced financial management, a CPA. So the question is November 2017, question 1. November 2017, question 1. I don't think there is another question in that case. We have been told that Viwanta Limited is considering purchasing a machine at a cost of 40 million. So they are considering purchasing a machine at a cost of what? 40 million. At a cost of 40 million. And then we have been also told that the company will incur additional 20 million to modify the machine for the special use. And then we have been told that the machine is expected to have a useful life of 3 years and a scrap value of 15 million. So we have the initial cost. The initial cost is 40 million. The initial cost is 40 million. And that we have been given the additional cost. So we also have the additional cost of 20 million. And then we have been told that also this machine will last for the 3 years and have the scrap value of 15 million. So the investment will require an increase in the net working capital of 2 million at the beginning of its useful life. So they need 2 million at the beginning of its useful life. So we will have the recovery of working capital. That is the recovery of working capital, which will come to 2 million. So my good learners, my good students, if we total this, we'll be able to get our total initial cost. That will give us the total initial cost. So that what will give us the total initial cost, which it will be, that is 20 plus 40 plus 20 plus 2, that what will give us 62 million. 62 million as our initial cost. 62 million is our initial cost. 62 million is our initial cost. That is good. So once you have that, is that now we need to read the full informations. Let's check the entire information. Let's check the entire information. Let's check the entire information. We have been told also that the additional investment in the working capital will return to the normal at the end of the machine useful life. The machine purchase will not affect the revenue, but it is expected to save the company 25 million each year before tax operating costs, mainly the labor. And then to be told also the corporation tax rate is 30% and the company's cost of capital is 10%. Required Roman 1. Advise Viwanta Limited on whether to buy the machine. Roman 2. Suppose the firm management is unsure about the saving before the tax operating cost. Full stop. carry out a sensitivity analysis on this variable, assuming that the variable shall vary adversely by 10%. So we need to carry out a sensitivity analysis, and the key variable here affecting us is the operating profit. So first we need to get Roman 1 before we go to Roman 2 before we go to Roman 2. So let's get that. So we have already gotten the initial cost. We also need to have the second working, the terminal cash flow. So let's get the terminal cash flow. So for us to get the terminal cash flow, it is basically the salvage value. So our salvage value is 15 million. And then our recovery of the working capital. So we have the recovery of our working capital. The recovery of working capital of 2 million. So this will give us a total of 17 million. So 17 million is the terminal cash flow. This is the terminal cash flow which we will recover at the end of this project, that is at the end of the 3 years. So the question to ask ourselves is, which discounting or which factor do we use in terms of discounting? Are we going to use an annuity or we are going to use a lump sum? Are we going to use an annuity or we are going to use a lump sum? Great. So first let's get the net present value. That's what the examiner is asking in this question. That is the net present value. How do we get the net present value? Someone to comment there. How do we get the net present value? Let me see your answers. How do we get the net present value? Since someone today has written that we take the present value PV minus the cost. That is good. Someone else, how do we get the present value? Are we all in agreement with our dream skills there? That for us to get the net present value, we take the PV minus the initial cost. Are we all in agreement? Let's see another options. Let's see another person. Yes, we are. Great. So I can see some of the response. They are good response. It is that we are taking that plus minus that. So that's a great response also. So any other person with a compliment, or we are all in one direction? So hope we are moving in one direction. Great. So hope we are moving in one direction. That's how we get our net present value. We take the present value minus the cost or the initial cost. This is the initial cost. So let's get the present value in this case. So we need now to get for us to get this present value, we need to discount the cash flow. Let's discount the cash flow. Let's discount the cash flow, or get first the cash flow. We cannot discount what we don't have. So we need to get the cash flow. We have been given the revenue. The revenue in this case is 25 million. The revenue in this case is 25 million. And then I will use two different methods. I will use two different methods to get the free operating cash flows. That's what we are looking here. So first we will subtract the expenditure, so less expenses. Which expense do we have in this case? Which expense do we have in this case? It's only one expenditure, and that is the depreciation. So less depreciation, less depreciation, less depreciation. How do we get the depreciation? We'll take the cost, which is this 2, which is giving us 60 million, minus the salvage value or the scrap value of 15, and then we divide by the 8 useful life, which is 3 years. We divide by 8 useful life, which is 3 years. That one will give us a depreciation. That one will give us a depreciation. So 60 minus 15, we get 45, divided by 3, we get 15. So depreciation is 15, subtract, that one will give us 20, less tax, 30% of this, less tax, no, is it 20? No, this is 10. Sorry. So 30% of 10, we get 3. Subtract that, we get 7. And then add back depreciation of 15. So our cash flow will be 22. That is, our free cash flow will be 22. Our 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 cash flow will be 22. Good. So if the cash flow is 22, that is one method. Another method you can take the revenue. So that is method 1. If you have the method 2, you can take the revenue 25, less tax of 30% of 25, 30% of 25. So 30% of 25, that is giving us 7.5. So 7.5, subtract that, 25 minus answer, we get 17.5. Add what is called the tax saving shield. Tax saving shield, which is you take the depreciation multiplied by 30%. You take the depreciation multiplied by 30%. So depreciation, which is 15 multiplied by 30%, that is the tax, will give us 4.5. So add that one. So if we add 17.5, we get 22. That is our cash flow. That is our cash flow. So it depends, when you are doing exam, which method are you going to use? So you can use any method. You can use any method. You can use any method, and you will get your answers. You will get your answers. Very important. You will get your answers. Very important. So having done that now with the cash flow, having done to the cash flows, we can now discount our questions. We can now discount our quotient. So we can now discount our quotient. So I will take the cash flows, multiply by our discounting factor, subtract our initial outlay. Remember, this is our initial outlay, and also this is our terminal cash flow. So for us now to get the NPV, or the net present value, I will take the cash flow, which is 22, multiplied by the PFIFA. PFIFA is how do we get the PFIFA? PFIFA is simply 1 minus 1 plus r raised to negative n. We divide by r. That is the formula of getting the PFIFA. So we have been given the 3 years for this project, and then the return on capital, or the cost of capital, is 10%. So 1 minus into 1.1 raised to negative 3 divided by 0.1. So that one will give us the discounting factor of how much? 1 raised to negative 3, 1 minus answer, 1 raised to negative 3, 1 minus answer divided by 0.1. So we get a discounting factor of 2.487. Put 3 decimal place, that is enough, plus the terminal cash flow. Terminal cash flow, now we are not going to use the PFIFA for the terminal cash flow, but instead we are going to use the PFIF. We are going to use the PFIF. The reason, what is the reason why are we using the PFIF? What is the reason why are we going to use the PFIF? The reason is that this terminal cash flow is being paid at the end of that 3 years. It is being paid at the end of that 3 years. So in short, it is a lump sum amount. In short, it is a lump sum amount. In short, it is a lump sum amount. So we will take a 1 plus r raised to negative n. So which will be 1.1 raised to negative 3. 1.1 raised to negative 3. So 1.1 raised to negative 3 will give us 0.7. So we'll take now the terminal cash flow, which we got 17 multiplied by 0.75. Yeah, that is it, minus the initial outlay, which is 62. Minus the initial outlay, which is 62. So that one will give us the net present value. That one will give us the net present value. The net present value. The net present value. So let's do the maths. So 22 times 24.87 plus 17 times 0.75 minus 62. So our net present value is 5.464. So this is the value of the net present value. So that is the part A, or Roman 1 of this question. That is Roman 1 of this question. That is the Roman 1 of this question. That is Roman 1 of this question. So we proceed to Roman 2 of this question. We proceed to Roman 2 of this question. We proceed to Roman 2 of this question. So Roman 2 of this question is asking for Roman 2 of this question is asking for the sensitivity analysis. So the question is asking us for the sensitivity analysis if the revenue will be adversely affected by 10%. If the revenue will be adversely affected by 10%. So what could be our cash flow? What could be our cash flow? That is the question we are asking ourselves. What could be our cash flow? What could be our cash flow? So now for sensitivity analysis, guys, is that the cash flow will be affected by the cash flow or that 10% adversely. Then it means our cash flow is the one which is going to be affected, because we have been told that the revenue will be what? Roman 2. I'm talking of Roman 2, that revenue will be affected adversely by 10%. The revenue will be adversely affected by 10%. The revenue will be adversely affected by 10%. So if the revenue will be adversely affected by 10%, then our cash flow will change. So which method can we use? Can we use method 2 or method 1? Remember, at the end of it, you will get the same results. So it means that our revenue now, in this case, the other part will remain the same, but the revenue here will change. So let's check if the revenue is affected by adversely by 10%, which means it will be 100 minus 10, which will be 90. So our revenue will be 90. So we will take now 90% of 25 million. 90% of 25 million. 90% of 25 million. So 90% of 25 million will give us 22.5 million. Subtract this 15. The depreciation will not change. So we take 22.5 minus 15, which will give us 7.5. Subtract the tax minus 3 to give us 4.5 here. 4.5. Add back that depreciation 15. Which we will get if you take 25 minus 5 minus 15, we get 7.5 minus 3 plus 15, which will give us 19.5. Is that the same? Let's confirm with the other one if we will get 19.5. So this one also should be 22.5 less tax. So tax is now changing 30% of 22.5. So here will be 6.75. This is method 1, this is method 2. Method 2 is the one which you subtract first the tax and then you add back the tax saving shield. So 22.5 minus answer, this one will give us 15. We get 15.75 plus that tax minus plus the depreciation tax shield, which is that plus. So we add 4.25. That one will give us 20.25. So I think there is a problem. 20.25. So they should be the same with this. So minus 19.5. So there is a problem here. I think which one it will be the same. This one should not be 3. It will be 30% of 7.5. So I think we didn't change that. 30% of 7.5. This one should be 2.25. Take 7.5 minus answer. This one should be 5.25. Add 15 plus 15, which will give us 20. So it will give you the same cash flows, 20.25. So having now the cash flow, and then we'll only need to change the cash flow here. We'll only need to change the cash flow, the first cash flow. Everything else here will be the same. Everything else here will be the same. Remember, when we are doing the sensitivity analysis, when you are doing sensitivity analysis, and also make sure that support the channel. So if you have something small, share with us. We will appreciate for that effort. We will appreciate for that effort. So we'll come now here and replace. So you will replace this one, but everything will remain the same. So let's replace that. So I will come here, replace 20.25. So let's get a new NBV. So let's get a new NBV. So if you put the calculator, how much will be your new NBV? If you put the calculator, how much will be your new NBV? So 20.25 multiplied by 4.87 plus 17 multiplied by 0.75 minus 62. So our new, it's coming to too small. It's too small, but that is it. So we don't need to change, because whatever we are getting is that. So 20.25 multiplied by 248.7 plus 17 times 0.75 minus 62. So we are getting 1.1. Can we round it off? Yes, that's 1.12. So this is our new NBV after adversely changed by 10%. So let's get now the percentage. So percentage, we will take the old NBV. So for us to get the adverse change in percentage, for us to get the adverse change in percentage, for us to get the adverse change in percentage, I will take 54.464 minus 1.112 divided by 54.64. So that one will give us the adverse change in percentage. So 5.464 minus 1.12 divided by 5.464 multiplied by 100. So there is approximately 80% or 7.964% change. So that is how to approach a capital budgeting quotient. If you have been given for a capital budget quotient, that is how to approach that quotient. So let's see any compliment in the comment section. Any comment in the comment section. Where do you see it is difficult for you in the capital budgeting, or you find capital budgeting very hard? Let's see if there is any person finding out that capital budgeting is very hard for them. So it is not hard. You have seen how I approach that question. Very simple. So long as you know what to discount, it's very important. He said that you take first, if the examiner has not given you the full initial outlay or the initial capital, that you have to do some bit calculation, like they bought a machine, there was incidental cost, there was installation cost. All those costs will fall under the initial capital. We will capitalize that. And then, so once you capitalize, then you need to remember you need to know let me change a camera to come down a bit so that we will not now see the entire video or the entire board because I've done it with the question. So let's now talk. Let's have a talk here now. So now we can discuss so that we can discuss that way. Good. So which area do you see in this CPA that you feel like you don't get it? So remember, we have so many topics in this advanced financial management. Most people fail this paper. I don't know why. It's a very simple paper that you only need to know the bit of concept and then a bit of confidence. Then once you have the confidence, and then it will be very easy for you to pass this exam. You can see that question. It's around how many marks? Yeah, almost 20 marks. Almost 20 marks. But only that you need to know which discounting factor are we going to use. So once you understand the discounting factor, the one which you are going to use, then it's make your questions look very simple. It's make your questions look very simple. So also you also need to know we also have other topics like the money market. The money market will be tested. The money market questions will be tested. So you need to know when the examiner asks you to use the 3 forward market rate, and also examiner when asks you to use 6 month forward rate. It's very simple. So when you have been given the money market questions, don't use the spot rate to convert that transactions. No, so we use the spot rate. If you have been asked for the 3 months forward contract, then you will use the spot the forward rate, either 3 months or 6 months, depending with the rates which you have been given, right? So you need to know which one do you use. So and then also when it comes to the money markets, there is some tricks which you need to know. Like you need to know, like for example, the payables and the receivables. Like if it is the receivable, what will be the role of the bank? Is the bank going to buy or the bank going to sell? Those are the things which we need to take into our accounts. If it is the foreign payment, what will happen to the bank? Like for example, a good example, you want to import a car in China or Japan. You want to import a car in Japan. So what you have is your local currency. You don't have the dollar currency. So you'll have to go to bank to exchange that local currency. So in short, in that, because you are buying the car from Japan, so that one is the payable. So what will be the role of the bank? The bank will be selling to you a dollar or the currency which the Japan yacht or the Japan car sellers are using. So the bank will going to sell for you that currency. And then now, if you are receiving a payment, let's say you are doing a trade in your local currency, that you get a client from an international space, and that client will pay you in a foreign currency. So what will happen to you? You will sell to the bank. So the bank will have to buy for you a dollar or any currency, even euros, the sterling pound, Australian dollars, the Canadian dollars. So the bank will buy from you. So you are now selling to the bank. So now the question is, when we say when bank is buying, when bank is buying the other currency, as they buying at the low rate or at the higher rate, so that they can make the good use of it or the profit. So you have to consider when you say the foreign receipt, borrow local, or foreign payment. So you need to cover all those things. You need to cover all those things for you to maneuver for the money market question. And in our class, we did a lot of these questions of money markets. We did a lot of questions of these money markets. And also, if it's happened that you are our student, then you might have these notes which we talk about the money market. We talked about the money market because money market is the question to which it do come in exam. It's normally come in exam, the money market. Yeah. So you need to know when it is the direct quote and indirect quote. We have discussed about the role of the bank, and we have understand about the buying and selling. We have understand about the buying and selling. Now we need to know if the bank is buying at a lower rate or the bank is buying at a higher rate. Then now we need in this scenario that we need now what is called the indirect quote or the direct quote, the indirect quote or the direct quote. So those are the some of the things which we need also to focus on that. We need to focus on that. So let me get the comment sections there. How do you perceive the money market? How do you perceive the money market? How do you perceive the money market? So here for direct quotation, if you have the notes, we have been told that here under the direct quotation, the amount are in a logical currency to purchase 1 unit of the foreign currency is given in, for example, if it is in $1 versus Kenya shillings, or a Kenya shilling versus $1. So in this case, under the direct quote is that the bank will buy at a low and sell at a higher in order to make a profit. In order to make a profit. So the role of the bank here is to buy. The role of the bank here is to buy. The role of the bank here is to buy. So that is the one of the key thing that also you need to understand. That's the key thing that you need to understand. So let me see in the comment section if there is any question that you have been doing it but you are not understanding it, then we can do that. So let's see our comment team if they have anything to share us. So waiting the comment section. If you have anything to share in the comment section, you can share. In terms of the money market, the international, we basically call it the international finance. We call it the international finance. We call it the international finance. Good. So another topic also that you need also to put into consideration is the portfolio theory. The examiner also do ask a lot of questions concerning the portfolio theory. So you also need to take into consideration that topic of a portfolio theory. You need also to know the portfolio theory. So portfolio theory is when you talk about portfolio, when you say portfolio is basically the collection of the investment. The portfolio is the collection of several investment. That's what it's mean by the portfolio. And in this topic of a portfolio, remember big investors, they do calculate the risk. The investors, they do calculate their level of risk. Before they invest, they have to calculate their level of risk. So they have to measure or to check the two types of risk. Remember, we have the systematic risk and unsystematic risk. Another one, when you say in this risk, which one does it, or in these two risks, which one is being affected by the portfolio or the diversification of the portfolio, and which one is not being affected by the diversification of the portfolio. So those are some of the risks which the investors, they have to look at it when it comes to the portfolio, right? When it comes to the portfolio. So you also need to know how to calculate the standard deviation. The standard deviation is used to measure which risk. Remember, we have relative risk and we have the absolute risk. Relative risk is the one which is not 100%, but for the absolute risk, the one which is totally 100%. So when you use the standard deviation, we use it to calculate the risk or to measure the absolute risk. So you also need to know how to use these two techniques. You also need to know how to use these two techniques. So that exam which is coming on Tuesday, I want to take that exam with a lot of confidence. Take that exam with a lot of confidence. Do it like as if you are doing the final. As if there is no other exam you are going to do it. So if you have been given a chance to do that question, do it as if there is no any other exam you are going to do it. Right? So you need to take it with a lot of cautious.